Hey, good morning. It's Monday, November 6th, 2023, 2:46 a.m. Right now I'm looking at ES futures. Let me sign into my demo account. Trading panel, demo. Okay, so I've marked New York PM session, which has already been taken. That was taken out at 1930 in Asia, created an Asia low. I have the Asia high marked and Friday PM session buy side, which is also Friday's high. Friday's low is all the way down here. Okay. So as we can see, I also have the NWOG new week opening gap for Sunday, November 5 marked. So I have Asia low, New York PM session taken, created a new low, which is the Asia low, Asia high, Friday's high, which is also Friday's PM buy side. So I suspect, because we can see the turtle soup here, around 1900. Price is going for Asia high. I have to see how it reacts because it may want to go all the way up to Friday high and New York PM session. Silver bullet is coming up, as we can see here, 3 to 4. Let me turn off the high time frame candles here. Okay, so let me see. Let me just wait and see because I want to see how price reacts to Asia high. So that's what I'm going to do now. Wait and see. Okay, my strategy is a combination of 2022 mentorship and silver bullet, which means I look for liquidity sweeps of New York PM session, or let's say time-based liquidity, highs and lows. New York PM session, highs, lows, how price react. Asia high, low, previous day high, low. How it interacts with NWOG. And I look at all of these reactions between 1:30 and 5 a.m. 1:30, 5 a.m. And I trade the turtle soup or the beginning of London distribution. This is the manipulation. This is a indicator accumulation for London, as you can see. Manipulation for London, 90-minute cycles. No, I have to fix this. Let me change these 90-minute cycles. UTC minus 5. Okay. Now it's lined up. I had to account for the time change. So 3 o'clock will be the end of the manipulation cycle for London. I want to see if price takes the high or the low of that manipulation 90-minute cycle and see how price reacts at 3 o'clock, where it goes. Right now, it took out London accumulation, so it manipulated higher. I would like to see it go to Asia high, give me a turtle soup, and I'll take a sell down towards Asia low. And my favorite turtle soup is like what happened here around 1930. Take out the low and immediately come back and close within the range. Give me a green candle that closed above the bullish candle, it came back and closed within the range. Then I look for price to retrace to that candle for a 2-to-1 return. You see, price took out the low, immediately gave me a bullish candle, closed back within the range, did not break that low. It actually gave me another bullish candle that closed above, another bullish candle that closed above the candle that came back into the range after the sweep. And then I would put a limit loss at the close of that candle. So when price comes back, retest it. I'll get in for a 2-to-1, risk reward return. I don't know what this is I'm doing here. So this is the low. I'll put my stop loss. It's only 1.25. I usually go for a minimum 3 point if it's less than that. And then 2-to-1. There you go. So if I had taken this trade, which I would not, I don't trade Asia, which I don't mind, but I don't know anything about it really. But if I had taken that setup, boom, it would have hit the target. So I'm looking for sells, put my stop loss somewhere above Asia high, at least 3 point total. But once I get a high, I'll go 2 ticks above and then 2-to-1 for the stop loss. Sorry, TP. But it's always easy for me to see these setups in hindsight. Everybody's an expert in hindsight. Right now, I have my funded FX $5,000 challenge window open in IC markets, MT5. I'm up $148.50, getting to 500 is the target. 500 before, plus 500 before, minus 300. I risk $25 per trade, but I'm up 148.50. Is that 3%? Once I'm up, I'm going to use Paladin's risk management strategy. What he does is once he's up 2%, he risks 0.5% of his total fund value until he's up 2%, and then he risks 1%. So I'm up 2.9%. I'm going to raise my risk from $25 to $50 per trade, 1%, to target 100. We'll see how that pans out. I'm comfortable with a $50 risk. And then we'll go from there. Let me look at the hour and see what we have done in the hour. Let me go to 1 hour. I don't want it on this one. Let me bring in my hour chart. Okay. So the hour hasn't done anything. Let's go in for this swing high. Order block. Let me mark that order block and see if I get a reaction to that, if it actually goes that high. Okay, so I'm looking at the order block. Friday's high, which is New York. I don't think it's going to go that high, but let's see. It's the day. I can't see anything on that. Oh, it looks like it reacted to this order block. Hmm. Okay, I don't see anything. I don't really look at Dixie. I don't understand it. This is ES. Oh, I had predicted it would come up into this premium fair value gap, come back down. It's created a BPR here. This is interesting. So here I see a BPR. Price could come down into that, go a little higher. Solid close. Okay, so let's see. CIVILITY. This BPR is all the way down here. So this is the day BPR. Let's see what price does. I'm just waiting. I look for reactions more than anything. Again, manipulation. I want to see. It already manipulated up out of consolidation. It just lost internet. So I don't have anything live. I just had an electricity dip and lost internet. Let's see how long that takes to come back. Okay, looks like internet is back. Now, this is what confuses me. As we can see, this swing high, this high was taken out in the manipulation phase. Price went up, immediately came back, closed within the range. Now it's moving lower. Broke this swing low, but it didn't close lower, so I'm still looking for higher prices. For now, I don't see a legitimate reversal or turtle soup. Trading into bearish fair value gap. We can't, but again, it didn't close below the swing low. This swing low, no closure. So I don't see prices going lower, number one. Number two, I don't see that it took out a time base high to legitimize that reversal or a reversal. I don't care if it goes lower. I don't see it. I don't see a time base. If it had done this at Asia high, yes. Traded up into a bearish fair value gap, closed lower, I would have taken that trade. But no, I don't see it. And number one, didn't take out Asia high. It didn't take out the high of the manipulation 90-minute cycle. I just don't see it. So let's see what happens when it comes down to the low of the manipulation and London accumulation. These lows, relative equal lows here. Let's see how it reacts to this consolidation period, this whole consolidation period. It's obvious that it did manipulate up. When we take this as a whole consolidation period, consolidate, consolidate, it's obvious that it manipulated up. But it's not giving me any of my triggers. I like this, an immediate reaction with the time-based liquidity, obvious direction that it wants to go in, which is up here because it didn't come back and close lower, came back close in the range, gave me a higher candle. I don't see that here at 3 o'clock yet, so it's not showing me any of my triggers that I'm comfortable with taking. Makes me comfortable with taking the trade. I like this. I want to see it react to Asia high and this our order block opening here. So let's see if it's even going to get. And this manipulation high. This is the high at 240 of the manipulation leg, London. Hmm. Equalize. Price could be on the move down. Equalize. Didn't break the manipulation high. Equalize. Close lower. Let's see if it creates a fair value gap. Takes out this low. Mhm. Equal highs. Yeah. But it's not my model. I don't have an entry. So I couldn't catch this move no matter what. Because it's not my model. Now, no, not my model. Again, if this had taken out a swing high, this 235, 240 high, 240 high, 235 high, had taken out an Asia swing high in a 90-minute session, came back and immediately closed within the range, closed lower, I would have put my entry at the low of this bearish candle. So when price retests, I would have gotten in. But no, it's the consolidation period. This is the candle that broke out. Came back, closed within. Unlike this green candle, I like to see two consecutive red candles for a retrace. That's not what happened here. That's not my entry. Even though the candles at 235 and 240 is exactly what I like to see, it's missing one key component. These didn't break highs and lows in 90-minute cycles. So nope, that's not my setup. Okay, I don't like how this is shaking up. It's 3:30. Price is moving sideways, but I'm thinking it's moving sideways to continue up. I'm running out of time. My window is closing. The latest I'll put in a trade is probably 4:30, maybe 5, but I'm not comfortable with that. 3 to 4, or outside of 3 to 4, 1:30 to 5:30, obvious liquidity sweeps, like I said. Once it takes out a time-based liquidity, then I can see the obvious sweep close back into the range, another candle in that direction. I enter on the retest. I don't see anything. Yeah, between 3 and 4 right now. let's go back while that's doing what it's doing to Friday, silver bullet, London. See if we could show my trade. See, this is exactly what it's doing. Equal highs, accumulation, manipulation, equal highs, came lower. During the silver bullet, created a fair value gap to the downside. As you can see, it took out Asia, distribution high, came back, closed within the range, gave me a second down close candle, which closed lower than the first. So if I had put my limit to come back and test the open, I don't know what's going on with this tool. I don't like it. Short. To one profit hit. I would come back because I would give myself a 3 point stop loss minimum. Whenever the high or the low is less than 3 points, I automatically take it to a 3 point minimum stop loss. 2-to-1 return there. Again, parameters or requirements for trade entry. After 130 or around 130, which is the start of a new cycle. Why are these times not lining up? Asia. Okay. Good. Let's see here. -5 UTC. -5 UCT. Let's see what happens here. Nope, not lining up. I don't know. Minute cycles. There we go. Good. Manipulation, excellent. Okay, so the manipulation cycle took out Asia high, came back, closed within the range, gave me a second down close candle, which is good. So I would have targeted the short to come back and test it. Yeah. And I would have been tied in 230. Again, I don't like it because it's outside the silver bullet, but it's a good clean setup as you can see. Wicked, came back, close, lower, stop above the high, 2 to 1 return, turtle soup. Or if I really wanted to enter between 3 and 4, wait for bearish fair value gap, wait for price to retrace, which is what it did here. So let's put my entry at the opening of the fair value gap. Hmm. Yep, and then I would have been tagged in at 310 to be hit at 5 a.m. Okay, so let's go back and see what price is doing currently. Hmm. What is going on with this tool? See, see. So this is nice. Took out London manipulation. Let's see if it closes back within this range and gives a lower candle close. I would have liked to see it take out Asia, but it took out London manipulation high. Let's see if it's going to do it with a wick or a body close. Okay, no. Okay, it's going for Asia high. Close lower. What I would like to see is bearish candle close, another bearish candle close lower. Immediately, 1, 2. Then I would set an entry for the retrace at the close of the first bearish candle, stop loss above the highs, 2 to 1 target towards the PM and Asia low. I would have liked to see it ping the Asia high